You need a lot of data. AI means nothing without data. Data is the oxygen of AI. So I'm looking at companies that have a lot of data. And then second thing, I'm looking at the companies that have the ability, do they have the talent pool and the capital to leverage those data?
Hey everybody, I'm Telis Demos, back with another episode of WSJ's Take on the Week.
And I'm Gunjan Banerji.
We've got a great conversation coming up with a big investor in technology to talk about, obviously, the massive AI tech trade that continues to eat the market, the companies that dominate the S&P 500. But before we get to that, we have an action-packed week coming up. We've got Mag 7 earnings, Fed meeting, jobs report, and, Gunjan, right up your alley,
the meme stocks are back.
Meme stocks.
Right.
They're
is it
back.
2021 again?
Are they back? Okay, Gunjan, you would know better than anyone else. Is the meme stock trade back?
So as the journal's meme stock correspondent, I can say that they are back.
Is that an official title?
It is.
Okay,
it is.
Good,
it's an official title.
Okay,
I have it on my business cards. The meme stocks are back. But I think the factors that have led to this meme frenzy in 2021 have not really gone away. They've actually intensified in markets. And I think people forget that. I mean, when you take a look at options activity, retail traders recently made up around a fifth of all options trading activity. So that's above the levels we saw in 2021. They've been really active in stocks trading for under $5. They're still really active in the stock market. So I think the gamblification of financial markets has gone up since 2021, and that leads to frenzies like this from time to time.
This is so interesting to me because when I think about what drove meme stock mania back in 2021 was like super low interest rates and working from home, and people weren't spending money on going out. They had money to burn. And those things are not happening today, right? Interest rates are higher. People are back in their office. They have to work for a living again. People's budgets are tighter, right? Inflation is eaten into their disposable income. So the fact that the meme stock thing is still happening tells me that maybe all those things we were talking about weren't really the underlying cause. And it sounds like it's just something broader than that.
Yeah, I think speculating in financial markets is now a feature of our modern markets, not a bug. People want to place YOLO bets on stocks, right? And I think brokerages have made it easier to trade. Individual investors have more access to riskier trades than ever before. On platforms like Webull, you can place bets on where the price of Bitcoin will be in just an hour from now. So there's been a trend towards shorter and shorter term trades and riskier trades in the financial market.
And what stocks are we talking about here? I mean, the ones that I've come across, big, huge kind of unexpected surges in names like OpenDoor, Kohl's, Krispy Kreme, GoPro.
Right.
Is there anything that unites these companies? What is it that makes it possible for a stock to be memed all of a sudden? Is there any formula that goes into it?
I think there's a few things. Lots of social buzz, typically high short interest, right? People think that there might be a short squeeze. And some people say it's like millennial nostalgia, right? These stocks that kind
Kohl's, American Eagle, that's another one that has boomed recently.
Or a few years ago, it was, of course, GameStop and things like that. But it feels like the euphoria that we've seen in markets the past few weeks, in part because of maybe the prospect of getting trade deals, has really hit a fever pitch recently. And we're seeing that with the meme stocks.
Well, there's certainly plenty to look at with trade deals. This past week, of course, the big news was that there was a Japan deal. So the stage is that August 1st is the deadline that President Trump has set for countries to either make a reciprocal trade deal or be hit with kind of whatever the U.S. thinks is the appropriate level. So Japan negotiated, now it's 15%. And then, there's a few things that go into it. But one of the stipulations is that Japan will then invest something on the order of, $500 billion plus, into the U.S. as part of that deal. And now people are saying that 15% is maybe kind of the new global baseline. And look, 15% is a high level, right? For Japan, that would be the highest tariff level in decades. But it's not 25%. Is that what kind of the market's looking at here? Is it all relative?
Yeah.
Is that why the market seems so optimistic?
Investors I'm chatting with don't seem that concerned about tariffs right now. I think they've acknowledged that tariffs are going to be higher than we thought, say, in December, but not quite as high as we initially thought. And I think people are expecting the economy to kind of hold up through all of this.
Well, look, maybe the macro sort of trade has played out to an extent, right? People have gotten used to this. They've moved on. They're looking at other things. But from a sort of more micro stock-specific sector trade, I think autos are going to be pretty sensitive to what's happening with Canada and Mexico. Because, for example, when the Japan deal was struck, the U.S. automakers didn't really like that deal, right? Because they feel like, okay, so if you're exporting a car from Japan, okay, you pay a 15% tariff, but you're not paying higher input costs on anything that doesn't come from the US, potentially, right? Whereas a US automaker, who, by the way, imports a lot of parts, might manufacture that car, in Canada or Mexico. So if those Canada and Mexico tariffs aren't lowered, you might have a situation where, even a car that's sort of made in the United States is more expensive than a car made in Japan. You just see a lot of stock volatility with automakers. I was even seeing the bonds of automakers have been more volatile than other sectors. So I think that's going to be critically important to watch in the week as we lead up to that August 1st date.
We also have a Fed meeting coming up, the monthly jobs report. I mean, there's just so much from an economic data standpoint. What are you watching the most?
What's happening around the Fed with, the president sort of quite upset with the fact that they haven't lowered rates yet is kind of more of the show. I don't think the market is not expecting the Fed to make a rate move at this upcoming week's meeting. So there might not be much there. And then we have a jobs report.
We also have big tech earnings coming up. And I really enjoyed my chat with Imran Khan at Proem Asset Management. And he made some really interesting points about how we talk about herding and kind of cult-like behavior among individual investors, but that also exists among institutional investors who kind of pile into some of the same stocks, maybe AI stocks.
Yeah, I think that, we talk about macro, but I think the market is pretty micro-focused at this particular moment. I think that, it'll be the Mag 7 earnings that continue next week, like Microsoft, Meta, Amazon. So I think hearing about what a big tech investor is thinking about ahead of those earnings is maybe the biggest kind of piece of news that investors should be thinking about as they get ready for the week ahead.
And just one quick note for our listeners and viewers, Proem currently has positions in Nvidia, Alphabet, Meta, Microsoft, and Amazon. And Imran personally has a position in Snap.
So after the break, that conversation with Gunjan and Imran Khan.
So the artificial intelligence trade has really powered the market this year, and investors can't seem to get enough of big tech. Imran, I thought you were the perfect person to dive into this with today. You were the chief strategy officer at Snap and helped take the company public with Evan Spiegel. And now you are the founder of Proem Asset Management, overseeing a really big portfolio of technology stocks.
Yeah, thank you for having me. I appreciate it.
Yeah. Thank you for joining me today. So Nvidia just hit this $4 trillion valuation, right? And I'm wondering, and I think a lot of people are wondering, how much bigger can this trade get, right? Like, how much bigger can this AI trade that already looms so large over our market really get? Are you still bullish on this sector?
Yeah, I think our AI is we're still very, very early days of AI. And, I think if you look at AI, where we are now still in the beginning of building infrastructure, right? And it's building data center, it's building chips, it's building all the GPUs and things like that. So it's still very early of AI. And if you want to achieve that vision, that infrastructure you want to build, NVIDIA has obviously significant lead on that. So if you believe in AI, if you believe that this infrastructure needs to be built, they are the biggest player in the town.
How are you investing in that specifically?
So the way to, I think about it is that at the end of the day, what drives valuation of a stock? It's the company's ability to generate cash flow over the next 3 to 5 years. So you really have to think about it is that how much investment all of the AI customers of NVIDIA has to make, and what are the profit that NVIDIA can generate over at least foreseeable future. I think that's, looks obviously very bullish. I think one area that I don't think anybody has clarity how long it will last and how it will continue, after everybody builds out the infrastructure. But, the reality is, the inference, which is going to continue to grow and growing at a rapid pace. And you need NVIDIA GPU for that as well.
It feels like people are afraid to bet against it.
The AI trend is very real and it's very exciting, and I think it's very important for the U.S. dominance in the global economy. So I think that's going to happen. The question always becomes how long, how fast, and how the optimization going to happen.
I mean, some of the numbers and projections I see out there are just wild, right? Like venture capitalist Vinod Khosla recently said that almost certainly within the next 5 years, any economically valuable job humans can do, AI will be able to do 80% of. I mean, that just seems huge, doesn't
Yeah,
it? Like that's a
yeah.
that's a
I
that's a
th-
big projection.
I want to be very skeptical about putting a timing on it.
Okay.
Obviously that 80% will happen at some point. Uh, I think what I found in my investment career in last 25 years, people throw those numbers and there is no consequences. But as an investor, you have to be thoughtful about it. What I learned uh, that it takes longer than people realize to things to happen. Even today, if you look at companies like Google or Meta or Amazon who are spending a lot of money on AI, we haven't seen a massive ROI or revenue boost from that yet. I don't know if it's going to happen in 5 years or not, but I think saying those kind of statements, I think it's hard to back it up.
Are you expecting that spending to continue? We have earnings from some of those tech giants in just a few days. Do you think that capex continues?
We have not seen any sign of slowdown on the capex
Or
spending.
any signs of returns on the capex, right?
Not meaningful enough, but it will happen. I think it's a fair to assume that you will see pretty significant improvement in ROI. Good things happens, but it takes time. It takes a lot of work. It takes a lot of iteration. And when there's this kind of platform shift happens, it's uncharted territory. In a lot of tech companies, disrupted our traditional industries. In many ways, AI will disrupt the tech industry. So I think it's really important that when tech industry going to disrupt themselves first with AI, who is going to win and who is going to lose. From an investor perspective, I think you need to have a very clear, open mind, and you have to be very flexible and see how the data comes in and how who is uh, uh, who is winning. The other thing I would say that somebody investing a lot of money doesn't necessarily make them a winner. If the capital was the only way to win, then companies like Google would never come out. Facebook would not win against other
Sure.
players when they're startup, or Snap would not become a teen favorite, or TikTok would not come. Yeah, so I think it takes a lot to win, not only the capital.
Is there a risk that these companies lose their charm? You own some of them, some of the Magnificent Seven.
Yeah, there's absolutely risk to it. So I cannot emphasize more. To be a good technology investors, you have to be very open-minded and you have to have some sort of imaginations. If you just have the imagination, but you're not open-minded, that your imagination might be wrong or altered, you will not be a good investor. But combination of a good imaginations and combination of an open mind and pragmatic is really important to be a good technology investor.
So there's all these big ideas out there about AI. How are you specifically investing in your portfolio? Like, are there specific sectors or stocks that you're particularly bullish on right now?
If you look at what we saw on the last cycles, right, it's the infrastructure you have to build, but then is the companies that take a very boring industry, because ultimately it's all about a function of GDP. A cool technology doesn't do anything. It has to create profit. And it has to create profit, it has to take share some part of the economy or accelerate the overall economic pie, right? So the first question you need to ask about it is this company going to take share from somebody, or it will increase the overall pie of the economy. If it doesn't, it's really a cool technology, but it's not going to create economic value. So what I'm looking at it is that, if you look at the last 3 cycles where those kind of values got created, right? You used to call people to book your travel agent, to book your plane tickets and hotels. Now you use online travel agent website.
Sure.
Massive productivity improvement that created a lot of economic value, created companies like Booking.com, which is $100 billion plus market cap. So I think that 6 big area that I'm really focused on, digital workforce. I think ultimately we're all going to have an agentic AI,
Like an AI assistant.
AI assistant, and
Sounds
doing a lot
nice.
of the work of AI and just making yourself more productive. Second would be defense. I think the way the war has been fought last 200-300 years will dramatically change. We're already seeing that. Transportation, how we commute and do all those things, AI will play a pretty big role. Fintech, financials, that's
Okay.
including stable coin, cryptos, and lendings. How
Yeah.
does the AI lendings and lending works? Healthcare delivery, how we get healthcare services. That is a massive opportunity. How can we do, healthcare diagnosis and things like that? So I think those are some big areas that we're going to continue to see pretty significant changes on AI. And in terms of shorter term, what I'm looking at it, what takes you to be successful of AI company? You need a lot of data. AI means nothing without data. Data is the oxygen of AI. So I'm looking at companies that have a lot of data. And then second thing, I'm looking at the companies that have the ability, do they have the talent pool and the capital to leverage those data?
So all this excitement about AI has also fueled concerns that like the speculation out there in markets is getting out of hand, right? Like IPOs are back in a big way, options volumes through the roof, right? Like people have really embraced risky bets in a big way. Does that concern you?
Yeah, it does concern me. I think one of the things to understand that there's a lot of new market participants, that we didn't have. 30 years ago, investment business was a club business, right? You had to go to certain school to get a job at Wall
An
Street. You
exclusive
had
club.
it was an exclusive club. But I think what changed over the last 30 years, one, regulatory front, Reg FD make the, I think, level flint, with the SEC document. Now you can easily find. The second thing that happened also, internet, and with AI, I think it will only going to accelerate, that it commoditize a lot of those exclusive knowledge. You can find
Yeah.
out about all this investment thing. And then the third is there's the newer kind of companies, the younger generation also understand better. So you take those three things combination, bundle that with, we are seeing a generational wealth transfer as the baby boomers are getting older, and they're transferring the money. All of those things, I think this retail is a very large part of the market, and I think they're here to stay. And I don't think somebody should be dismissive of this group of people, and I think it's very unfair to be dismissive of these people. And I think dismissing them is you're ignoring a large chunk. The other interesting thing is that social media, if you are going and talking about a stock, in many cases your ideas get challenged.
Yep.
So it's not like you're saying something and nobody's challenging you. And that's one of the most interesting thing about social media, that there is a lot of people who are supporting you and a lot of people who are hating you. So it's actually a great conversational platform.
And I also think two things can happen. I think there's communities online where you can join a herd and there can become like a cult-like mentality around certain stocks where you're not being challenged. And then there's communities where, yes, people are certainly challenging your views on a particular stock or sector.
The key thing is, if you look at the herd mentality, you see that among the hedge fund managers too. And they're supposed to be all smart. Many of them invested massively in a private market in 2021. What happened to some of those companies?
What did you make of the move in OpenDoor Technologies recently? So this was a stock, it's trading under $10, and out of the blue, it soared more than 100% in trading one day and was like halted in trading, reminded a lot of people about the meme stocks.
Yeah, I think, we're seeing a couple of other meme stocks out there also. And I think that is going back to this whole, there's a new group of investors, and they have a lot of capital to deploy, and they can move the stock very, very fast, and, so we will see how it plays out.
So speculation in markets, is it a feature of the modern markets rather than a bug?
I think the market was always speculative, right? Because, like in 1998, long-term capital management almost took down the entire market.
But
there
that was a
specula-
hedge fund. These are individual investors.
Yeah, so
Isn't speculation
But
and
the-
gambling in markets more widespread than it was in the past?
yeah, because the knowledge got commoditized, so now people can do it. It used to be a bunch of exclusive people. You can argue that Bear Stearns and Lehman was speculating the mortgage
Of
market and
course.
completely took down the entire economy. So we get all upset on individuals, who is actually
I'm
is their
not
own.
upset with
I'm
them.
just saying that, but I know you're not. But I'm just saying that we all get upset
Yeah.
about an individual who hopefully it's their own money and speculating, and they have right to do so. But then big banks like Bear Stearns and Lehman
Yeah.
took the entire country down. All I'm
A
trying
hedge fund manager of the people.
No, I'm just trying to be objective. I think the speculation is always part of investment world, and as an investors, you have to be very, very careful when there's a lot of speculation happens, how to protect your capital. And by the way, you can argue that there is a lot of speculation happening among institutional investors right now.
How are you thinking about the private markets right now?
I think private market is overvalued. You know, and I think that
OpenAI, SpaceX.
yeah, like these are great businesses. But let's take SpaceX, right? I have no quorum with SpaceX. It's a great company, but I'm just asking a question. If you're investing in SpaceX, are you investing in a company that has peak market share with a peak multiple, right? That is the problem, right? Because I just can't imagine a world that a decade from now, that every country in the world have this kind of concentration risk with one company. In B2B industry, you never see monopoly. Now, if you believe, it'll be crazy for all the world government to put all their chips in one company. Even if you love Elon, it doesn't
Sure.
nothing to do. It's just that risk management from a business perspective.
So you think there's more opportunity in the public markets than the private markets right now?
I think you're seeing new kind of companies in a private market, but you're paying up for such a high price for that. Like, do you really pay 25 times reported revenue multiple for OpenAI, or do you pay 25 to 30 times earnings multiple for Nvidia? Just asking the question, So it feels like relative value for these hot companies. Public market, in my opinion, feels like a better place to invest.
We've got one more question for Imran Khan. That's after the break. What, in your view, is the biggest risk to the AI trade right now?
I think the biggest risk is it's going to take longer than people think. I really do so, because there are, people are saying that in 5 years, entire white collar industry going to go away. 80% of the job will be done. That's, those kind of expectations. Because the thing is that even if you have a technology, human takes longer to change their behavior.
Right. There's political dynamics at play.
The political dynamics of that, there's a fear of making mistakes, and an unknown is always unknown, So you don't know what can happen if you reduce the number of headcount dramatically. And so I always think that things takes longer. Like, even if you get the right about the future, but it might take longer. So I think the biggest risk is that people get disappointed that it takes longer than people realize to get the ROI and all these kind of things from it.
Imran, this has been great. Thank you so much.
Thank you for having me. I appreciate it. It's a lot of fun. Market feels a little bit of 2021 vibe-ish.
Yeah, we have to talk about that. The 2021 vibes.